The interview is live. Look at that. Hey guys, quick reminder before you enjoy today's episode. I do a lot of work in the descriptions below to timestamp when the founder gave me critical data points like revenue and they finally shared their customer count or their team size and valuation. So you can use those timestamps to click around. Also, I'm going out on a walk here while I keep rocking my lockdown beard and while we all wait for this nasty virus to go away. But I will be hanging out in the comments on my phone. I'll be looking for your comments and I'll be replying to all of you guys. So if you have questions that you want to ask the founder or ask me, you can put them below. I'll see them all. In the meantime, enjoy today's episode. Hello, everyone. My guest today is Peter Irikovsky. He is the CEO and founder of a company called Exponea, which is a combination of a CDP customer develop. Hold on. What is CDP? Customer data platform?
Yes.
I got it on the money, baby. He helps folks with their CDP and omnichannel campaigns. All right, Peter, you ready to take us to the top?
Of course, let's go.
So talk to us a little bit about this, the idea of CDP. There's a lot of people starting to use this term as taking off, but it's still a pretty fragmented market. Where's Exponea playing? Are you serving a specific customer base or what's your angle?
Yeah, so we're actually a customer data experience platform. So we're combining the actionability of campaign tools with the smartness of a CDP. And we're focusing primarily on online retail and e-commerce. And so that's our niche where we're the strongest. And this kind of combination is really unique in one thing. It enables us to have the fastest time to value on the market. And with that, we're also the best rated CDP on the market.
So define best rated, like is that via G2 or what?
Yeah,
what survey?
G2.
Okay,
G2. And if you look at it, like we're by far the leader in there.
And who else is in the space?
You have quite a lot, like you have Blue Shift, Latex, Optimove, and a few other customers like that, companies like that.
Okay. And are you unique in that, again, there are other CDP platforms, but you're hyper-focused on online retail and e-commerce?
So I think the combination of having the focus on online retail and a lot of use cases specifically for this niche and having the campaign part directly in the tool and build ground up, that's unique.
Okay. Now, when you last came on the show, this was back in September of 2017. So almost, what is that, two and a half years ago or so.
Yeah.
You had shared that you launched the company in 2015. And then at that point, you'd raised about, I think, $3 million. Have you continued to just use the $3 million to drive growth or did you raise more capital?
We raised significantly more. So we've raised over 35 million.
Okay. And where's most of that capital gone? What are you spending it on?
Growth into new markets. That's the biggest part.
Be specific though. Like, does that literally mean building an office building in Dublin or what does that mean?
Yeah. So like we now have quite a big team in the US, in Germany. At that time when we were speaking, we were only launching the UK. And now UK is by far our biggest market. And so like the biggest expansion is going into sales, but we've also increased significantly the size of our product team and further increased the leadership in the product.
Okay. So how many folks are on the team now today?
Today, in terms of FTEs, we are around 220, 230.
220. And how many are engineers?
Around 60.
60. Okay. Are they concentrated
60,
in a specific international office?
Yes. No. So most of the developers are in Slovakia. And then we also have some in Czech Republic, but we are keeping them focused because we believe that for engineering, it's useful to be in one office, whereas now it's not that useful. But yeah, in general, we believe in this.
Yeah, obviously we're talking about the virus. We'll talk more about how COVID is potentially impacting you guys and how you're planning to play it. But finish up the team here for me. So 60 engineers, any quota carrying reps?
Yeah, of course.
How many?
Less than 20 now.
So you say, of course, but like, look, sometimes if you have a price point, an average ACV of less than like $5,000, you can't afford to pay people quota. So you don't use a quota carrying rep model. What is the average customer paying you per year?
100K. Just like 96, 97 is currently the average.
Oh, wow. Okay. So that's much higher than it was 4 years ago. You told me 4 years ago it was about 40,000. So you've gone up market.
Yes, significantly.
Yep. And was that from driving expansion revenue off that historical base, or you just brought on bigger customers from the start over the past 2 years?
So both. We've also, offboarded some of the smaller customers because at the beginning we were not that focused on online retail, and so we've had some other customers, and so we actually offboarded some of them and focused on bigger customers, but also have driven significant expansion. So our net retention has been long over 130. Now it's like 121%. And like we have a few contracts, expansion contracts that can drive it to 140% again.
Well, and break that down for me. What's the gross revenue churn under that?
12% is the annual gross revenue churn. And so 121 is the net revenue churn.
Got it. So you've got 12% gross revenue churn, then you've got, call it like 32-ish% of expansion to get up to 120% net.
Yeah. That's upsell, cross-sell, and expansion in total. Yeah.
Yeah. Okay, that's great. And how many customers are you now serving today?
So we're at 19 million in CARR. So that gives you something like 195 customers, something like that.
Got it. You said you're at about $190 million $19 million run rate.
Yeah.
And word has it you're talking to some growth equity funds right now. Are you trying to find more capital, and if so, what would you use the capital on?
Yeah. So like we've got to an impasse with our current investor, and so we are looking at the different options, and growth equity seems best. And so we're already in the process with some of the top growth equity funds who actually share the vision that we have. We want to make this into a multi-billion company. We believe we can drive the company to over 200 million in revenue in like 5 to 7 years, because also the crisis is structurally playing strongly in our favor, because digitization is like the topic everywhere in retail. So we see that there's a big opportunity, especially in the US. And we want to have an investor who would enable us to reach the full potential.
So because of the virus, and obviously we're recording this on Friday, April 3rd, and we'll release it pretty quick soon after. But there's two kinds. Like I've talked to a lot of VCs, a lot of growth investors. There's kind of two very different playbooks people are going. One is they're just not doing any more deals, right? Or maybe they're only putting some extra capital into portfolio companies to help support the portfolio companies. And then others are saying, you know what, this is an opportunistic time. I'm going to go find companies that are going to thrive during the crisis and put money behind them. It sounds like you found some that are taking the last approach, right? What are the conversations sound like? Are you seeing any kind of smaller valuations in the crisis than you would have seen 4 months ago?
Yeah, so like definitely the valuations would be lower, but I was worried that they would be significantly lower. It doesn't seem to be the case. When you look at the stock market, the SaaS companies are down 17% to compare to where they were before this started happening. So it's not that massive drop in terms of valuation. And there are quite a few funds who were really like fortunate enough to raise significant new funds during 2019, and many of them are looking at this and thinking about who will actually win and who will benefit from what is happening and from the changing behavior. And those are the funds that I believe are the best, because they are having the right mindset. They are skating where the puck is going to be, not where the puck was. And they see that we are actually the company that will benefit from this.
How much would you like what are you targeting to raise?
So all options are on the table. So we're talking about majority deal, because we believe that through this we will offboard our original investor, and the question is, where would we agree with the rest?
Okay, sorry. You would. So let me just repeat this back to you. You would sell more than 50% of the company, because a large chunk of that would be buying out your early investors.
Yes.
Okay,
yes.
And strategically, why would you do that?
So we see that our existing investor has different views than we have, and we don't believe having two investors beneficial for us. So we believe that the easiest way is to do a large secondary to getting off the cap table and really continue with the expansion. One example of like where we have really big differences in opinions is he would want us to focus on Europe. And we actually see the significant opportunity in US and want to keep driving that. And also for that, we believe having an investor who is established here and can help us, drive that growth is definitely beneficial.
Mm-hmm. Interesting. Okay, so I mean, it sounds like you don't have the exact number pinned down, but what do you think? Like, can you give me a range? Like, it sounds like this would need to be something between like 40 and like 70 million or something like that.
In terms of valuation?
No, in terms of what you'd be raising.
Actually, I think it's going to be even more. We believe it's going to be north of 100.
Okay, so
100 million.
Okay, got it. So you think it'll okay?
Yeah, and because there will also be some money flowing into the company, to fuel further growth. So that will definitely be, north of 100.
Ignore the money.
Yeah.
Ignore the money going to Grows and LJ, or like buying those folks out. Mm-hmm. How much do you want on the balance sheet of the company for operations?
So we don't really need much. So it will strongly depend on how the investor will look at it, because we were actually expecting to break even during second half of 2020. Now, with what's happening, it's slowing down the sales cycle. So I don't know how well we will be able to get there, and how long this would last. So it's difficult to say. So we don't really need much. However, if we want to drive the growth further, I believe it will make sense to invest more and drive the growth further in terms of short term, because there will be the dance period, as they call it, the hammer and the dance. So once things go down, people will still be worried. All those stores would be open, nobody will go to shop. And people would still prefer online significantly. Now, how can we help companies do this? There's a lot that we can do. Like, nobody now knows how do their buyers think, what kind of personas do they have online, and people are blind to this, and we can very quickly help them discover this and then enable them to have the customer experience that would be consistent across channels and would be really not pissing off the customers that they have, but really making them into loyal customers that they can have for the long term.
Mm-hmm. Yeah, no, I mean, now's the time. Based on everything you've told me for what you're focused on, like, now is the time to invest aggressively. Now, are you in a spot right now where you don't need to raise if you can't get a good deal? Are you profitable today?
So we're not profitable, but as our backup option is, we know that if we don't raise by the summer, we will have to take some cost-cutting measures to make us profitable, but it wouldn't have to be very aggressive.
Okay. And when you say you're not profitable today, you're talking like maybe burn of $1 million a month, or less than that?
Less than that.
Okay, like less than $100,000 a month?
No.
Okay, so between $100,000 and maybe $500,000 a month, something like that. Okay, fair enough. And how are you? So let's talk about the virus for a second, right? Assume you can't get a deal done, right? How many, as the CEO of a SaaS company during a crisis, how many months of runway are you planning for? Again, assuming you don't get a deal done with the growth equity firm.
No, so the thing is, we currently are burning money, and we gave everyone in the company a promise that we are not going to do cost cutting. We're focused on ensuring that we pay the salaries to people. The only people who are leaving the company are those where we already had some like performance management process initiated. And so there are some people who left, but it's like single digit, numbers. And we are looking at it from the perspective that we believe we will raise the money because there's quite high interest. Now, if we don't, we've already made it public to also, if we don't, by end of July, we will announce some of the measures that we would need to be taking. And we're now, doing these scenarios. It might not even be needed because the pipeline in terms of sales is moving slightly better than we were expecting like 2 weeks back when we had this kind of all company meeting where we were discussing this. So there are still deals moving in the pipeline. So if sales is progressing well, we might not even need to do any cost cutting. But it also very much depends, because like even big companies that are working with us are struggling heavily because most of the big retailers, they have 25-30% online sales, and if 70% is gone, even if the 30% doubles, that's still just 60% of your original revenues. So it pretty much depends on the macro environment.
Yep. I mean, I guess what I'm curious about is like, have you left yourself enough cushion? So your Series C was a $15 million euro round back in June of 2019. I mean, do you still have the majority of that, call it maybe more than $10 million in the bank, or have you already plowed through a lot of it?
No. Yeah.
Okay.
We've got, if I remember correctly, we have got something over 5.
Okay.
In total that we have on the accounts plus from the investors.
Okay. Fine. So you have, assuming you're burning less than $500,000 a month right now, and you have more than $5 million in bank. I mean, you have plenty of runway to figure this out, and you feel good about raising the round.
So we're burning slightly more than $500K per month right now.
Okay. Yep. Okay. What about some of the other economics? So, in terms of onboarding new customers, last time you came on, you shared that you were spending about $38,000 on CAC. What's the updated fully weighted CAC today, and where are you spending that money?
Yeah. So like now it's definitely more because also the contract size is bigger. So currently, if you do the weighted, which is quite difficult because we have new regions where we're investing heavily and don't see the traction that you need from that yet. But like the return on CAC is on the blended average is 21 months. But if you look at some of the regions that are already well performing, we're just slightly over 12, which is what we want to achieve in all the markets once we go through the ramp up period.
Got it.
So that gives you the rough answer also, looking back at the numbers.
Yeah. So you're spending like 110,000 up to maybe 150,000 in new markets, 110,000 in mature markets to get a new $100,000 a year customer.
Yeah. And in some of the new markets, even slightly more than that. Yeah.
And where is that money going? Is it mainly sales comp, or where are you spending it?
So it used to be mainly people cost and events. Now we've pivoted significantly towards digital. So we now have a great new CMO, and she's building the entire inbound engine. And so we will be spending much more there. But we're in the transition on that.
And what does growth look like? So last month, how many new customers did you add, and how many do you think you'll add this month?
So year-over-year growth for 2019 was 101%. So we barely made it triple digits, trying hard to the very last moment. And February wasn't very strong, and March could still be strong. There's still one contract that should be coming in today, and with that, the total growth for the month would be around 700K.
Yep. In new ARR.
Yeah.
That's in this month. That's in April.
That's for March.
Oh, March.
And so and we were actually before COVID hit, we were expecting about 1.5 million. So that shows you that a lot of deals, they're not lost, but many are postponing the decision to see what's going to be happening.
Yep. That makes good sense. I mean, look, the growth is there, right? Back again, when you came on last or late 2017, you were at a $3.5 million run rate. Now you're at 19. So the growth is clearly there. The question is kind of how do you pivot in kind of the virus environment? So let me ask another question, right? If you're trying to go out and with some of these growth equity firms and raise $100 million, you have to obviously tell a story to get a valuation you like, so that you don't get like super, super diluted. From a range perspective, what valuation are you targeting?
So it will strongly also depend on, we're not as the only parameter. We really want someone who will drive it forward with us. So, but like we only so far got, we're early on in the process, and we only got some indications. The indications were saying something around 200.
Yeah.
So now that's given what's happening in the market, I think that's roughly fair. We were able to get much higher valuations. Like, a year back, we had several investors who were willing to pay, 300. And so there's some discount. However, I really look at it from the perspective that we want to showcase that there is a company with strong ethics out of, Europe that can make it global and can be a leader in a category. If we find an investor who shares that vision, even if someone would be willing to pay whatever 10, 20 million more, we would still likely choose that, that investor.
So your deal, since you're going to sell about 50-60% of the company, I mean, you could see a deal happening where it's like $100 million investment on $100 million pre-money valuation, which would be $200 million post, and you're selling 50% of the company.
I think the percentage can be even higher, but there's so many variants that,
Yeah. Very good. All right. Let's wrap up here, Peter, with the famous 5. Number 1, favorite business book.
Blueprint to a Billion.
Number 2, is there a CEO you're following or studying?
Not really.
Number 3, what's your favorite online tool for building Exponea?
Currently Zoom.
Yeah. Yep. Number 4, how many hours of sleep do you get every night?
There is a lot, but still get average of 7+ probably.
Okay. And situation, married, single, kiddos?
Happily married with 2 amazing kids.
2. Okay, so that's one new one since 2 years ago, huh?
Yeah, exactly.
Congratulations.
Yeah, 2-year-old boy.
All right, and how old are you?
I am 35 or 36, 35 still.
35.
It changes every year, right?
All right, wrap us up here, Peter. What's something you wish your 20-year-old self knew?
I was thinking about it, and I would say probably to be more patient, but I wouldn't have listened back then. So
Guys, there you have it. Exponea looking to do a $100 million round, a big secondary here. The company's doing $20 million in ARR, $20 million in ARR, up from $3 million just about two years ago. 101% year-over-year growth over the past 12 months. Now serving 190 online retailers and online e-commerce brands, helping them get all their customer data in one spot and act on that data. They're seeing nice growth in the era of the virus and the recession. Again, hoping that helps fuel a healthy round that they're doing. 121% net revenue retention with a team of 220 people, 60 engineers, 20 quota carrying reps, others obviously admins, all remote obviously. Now, Peter, thanks for taking us to the top.
Thank you, Nathan. You should be a sales guy.
All right, guys, what'd you think? Enjoy the interview? If you like that one, a lot of data, be sure to click the little like button here on YouTube. And then additionally, coming up tomorrow, we have a founder revealing their valuation. The day after, we've got someone raising 100 million right now in the middle of the virus. How the heck are they going to do this? I don't want you to miss these interviews. So be sure to click my face right here and click the subscribe button to subscribe to the YouTube channel so you don't miss those new episodes. In the meantime, if you're looking for something else to do, I recommend you check out one of these two episodes for more data on SaaS companies. And if you ever want more data, just look in the description of the videos and you can click to getlatka.com, where we have over 1,400 companies and all their revenue data, their churn, their CAC, their valuations. It's all there. It's like a much better version of the Inc. 5000. So check it out. In the meantime, be sure again to subscribe and then pick a video and interview to listen to next.